Hi, everyone. Just give a few more minutes for everyone to sign in. Okay, great. Hello, everyone. My name is Stephen Leong. Welcome to Prime Global's Knowledge Sharing and Enhancement webinar. I'd like to go over the usage of the webinar before we start. If you have any questions during the presentation, there's a raise hand option next to your name. Click on it, type your question in the questions and answer box. Our presenter will either answer soon or may wait until the end of the presentation. Please lower your hands after your question has been acknowledged so our speaker may know when you have a different question. Please also note that the speaker screen can be moved around so it does not block your view of the presentation. Today, we have Mr. William Wong of Iowa CPA Limited, located in Hong Kong with us, who will be sharing the topic of an introduction to current China financial reporting and audit frameworks. William is a director of Iowa Hopkins Group. He provides technical accounting advices to Iowa Hopkins teams and to external clients in the field of financial reporting standards under mainland China and Hong Kong. William is a member of Hong Kong Institute of Certified Public Accountants and the Association of Chartered Certified Accountants. With pleasure, I'd like to introduce you to William.
Okay, thank you, Stephen. So, good afternoon, everyone. Welcome to our webinar on Introduction to Financial Reporting and Audit Frameworks in China. Our webinar is expected to last for around 1 hour, and I hope all of you can obtain a basic understanding of the topic after the webinar. So, let's have a look over the agenda today. So, we will introduce the development of current China financial reporting and audit framework first, and then we will focus on convergence of China standards and the international standards to see what is the main difference between both sets of them. After that, we'll have a look over current layout of the financial statements under China standards. And then last but not least, we'll have a Q&A session. So the questions you raise, I'll try to answer in this session. So then let's start our webinar now. So if talking about the China financial reporting and audit frameworks, they are developed since early 1990s. But at that time, the development of the standards is just for their domestic needs and hasn't considered the interactions with international standards. With the development of economic reform and participation in the international markets, there's a need to develop a set of financial reporting and audit framework that can converge to, or at least comparable to, the international standards. Hence, by year 2006, a new set of accounting and auditing standards that are promulgated by the Ministry of Finance of China to respond to the needs. The China financial reporting and auditing standards are issued and governed by the Ministry of Finance of China. So under current China laws framework, these standards are themselves regulations in nature, so that business entities in China, they are required to comply with them, and the government boards will recognize it as part of the official rules. So in the China environment, if the standards are not issued by a government body, then the legal enforceability will be a concern in mainland China. The China standards have fixed the accounting codes, chart of accounts, as well as the accounting treatments of the accounting terms in the standards. Such practice is not found in the IFRS, since under China environment, the official specification of the accounting terms can reduce miscommunication between different users. And under China laws and practices, the financial year follows calendar year. That is, the official year-end date is 31st of December for all entities in China. Okay, let's move on to talk about current China financial reporting framework. Okay, currently, there are 3 sets of accounting standards for general purposes financial statements in China. Okay, the first one is accounting standards for business enterprises, in short form usually known as ASBE 2006. This set of accounting standards is issued from 2006 onwards and is effective from 1st of January 2007. Okay, for the purpose of this webinar, we will name it as the new standards. The new standards will keep update after the issuance of the new IFRS, or if there is any revise or withdrawal of the IFRS. For example, the issuance of IFRS 15, talking about the revenue, lead to a change in the new standard number 14 on revenue, and the withdrawal of new standard number 15 on construction contracts. The second set of accounting standard is on accounting systems for business enterprises. This set of accounting standard is issued in year 2000 and is effective since 1st of January 2001. Okay, for the purpose of this webinar, we will name it as the old standards. The old standards can set to be the first full set of complete financial reporting standards in current China, since it covers all aspects of accounting issues at the time of issuance. But please note that the issuance of these old standards is to meet the domestic needs, since there is no complete regulations governing the accounting treatment at the time. So please also note that the new and old standards, it doesn't mean that the old standards are no longer effective. The new and old standards are just for differentiation. Actually, both sets of standards, they are effective and they are parallel one. And the third one, and the third accounting standards is talking about accounting standards for small enterprises, which the short form is ASSC 2011. This is an updated version by year 2011 and is effective since 1st of January 2013. So this is a financial reporting framework for small enterprises which fulfill certain criteria. However, a small entity which fulfills those criteria is not compulsory to adopt this ASSC 2011. Rather, it may adopt new standards or old standards, which it is at its discretion. Apart from accounting standards for general purpose financial statements, there are accounting standards specifically designed for certain industries. For example, there are accounting standards for government bureaus, that means for the government financial reporting, as well as there are accounting standards for the secondary schools and the primary schools, etc. And let's move on to talk about the applicability of the standards. For the new standards, certain entities are required to adopt the new standards, such as listed companies, non-listed financial institutions, non-listed insurance companies, state-owned enterprise owned by the central government. All these entities, they are required to adopt new standards on a compulsory basis, while the China government encourage large to medium-sized enterprise to adopt the new standards on a voluntary basis. The government objective is to encourage all reporting entities to use the new standards, but it's an encourage, but not a compulsory requirement. Then we talk about the old standards. So in current situation, currently there are no compulsory requirement on which entity should adopt old standards. So that means apart from those that are required to adopt new standards, on a compulsory basis, all entities can choose to adopt old standards. So how about ASSE 2011? So ASSC 2011 is applicable to enterprises that fulfill certain criteria and requirements, such as the operation test and the size test as laid out in the standards. However, even the operation or size test are fulfilled. So there are certain reporting entities cannot adopt ASSC 2011, such as if you are one of the group companies, that means you are one of the holding companies of the group company, or if you're one of the subsidiaries of a group company, then you cannot adopt this ASSC 2011. Moreover, financial institutions, or if you have shares or debentures, they are traded publicly. These are also cannot is not eligible to adopt ASSC 2011. The accounting standards that are convergence to the IFRS is the new standards. So we'll focus on the new standards in the subsequent slides. Before we move talking further about the new standards, so let's also have a brief look over the differences between the new standards, old standards, and ASSC 2011. Okay, practically speaking, there are quite a lot of differences between them. So the list can be very, very lengthy. But for our webinar, so we'll just focus on several major terms for your reference. So as you can see, the new standards introduce certain concepts which are new to the old standards. For example, financial instruments, risk disclosure, share-based payment. These items are introduced in new standards, but as you can see from the table, there is no such concept in the old standard. Moreover, when comparing between the new standards and the old standards, certain concepts that are found in the old standards is also revised or updated or enlarged. The definitions are enlarged in order to match with international standards under the new standards. For example, say deferred tax. For example, say related party disclosures. The related party disclosures, the scope is larger under the new standards and is smaller under the old standards. For example, close family members of key management personnel, investors that can indirectly exercise common control or significant influence are also defined as related party under the new standards. But this definition is not found in the old standards. When talking about the new standards and the old standards, okay, one point is quite interesting is that talking about impairment loss. Impairment loss is allowed to be reversed under the old standards, but it is not allowed under the new standards. So we'll further explain this issue subsequently when we talk about the convergence of the accounting standards. So if talking about if we went back to the table, so as you can, so you'll see that in ASSC 2011, in this standard, there's no concept on financial instruments, risk disclosure, share-based payment, deferred tax, etc., as shown in the above table, because the purpose of ASSC 2011 is to simplify the reporting requirement for the eligible small entities. Okay. So in the previous slide, so in the previous slide, so it states that so the standards that are convergence to the IFRS is the new standards. So some may ask, how about if whether ASSC 2011, whether it is whether it is to some extent convergence to the IFRS for SME? Since both standards they are issued for private entities, they are issued for small to medium-sized entities, and also they are for non-publicly accountable entities. But in replying to this question, so please be reminded that ASSC 2011 is just a set of domestic standards only, and is not intended to converge to IFRS for SME. Moreover, there are quite a lot of areas that are found in the IFRS for SME, but not found in ASSC 2011. For example, say group accounts is applicable for can be found in the IFRS for SME, but ASSC 201, as mentioned in previous slide, group companies cannot adopt this ASSC 2011. For example, say related party disclosures, deferred taxations, etc. These concepts are also found in IFRS for SME, but not in ASSC 2011. So there are quite a lot of differences between IFRS for SME and the ASSC 201. So that means you can't say these two standards, they are the same or converged. Okay, then let's move on to talk about the current the structure of the new standards. The structure of the new standards is quite similar to IFRS with details as follows. Okay, the first one is talking about the basic standard. The basic standard is quite similar to the framework for the preparation and presentation of financial statements under IFRS, because the basic standard, it defines the basic terms and it defines the framework of the whole China standards, the new standards. Apart from the basic standard, then it moves on to talk about the specific standards, which is equivalent to respective IFRS or IAS. And then the third layer is talking about application guideline and interpretations. Because the China accounting standards, whatever new standards, old standards, or ASSC 2011, they are expressed under the rule-based format. So there are detailed application guidelines and interpretations, which allow the users to follow up the standards requirements in a more convenient manner. And then the fourth one is on supplementary regulations from the Ministry of Finance. So there's no such issue in the IFRS because IFRS is not issued by any government of the world. But in the new standards, as mentioned, because it's issued by the Ministry of Finance in China, so there are supplementary regulations from the Ministry of Finance to supplement the certain requirements if they find necessary. So let me give you an example. So for example, with the implementation of revised accounting standard on revenue, which is equivalent to IFRS 15, as well as financial instruments, which is similar to IFRS 9. So the financial statements under the new standard is changed. So so the Ministry of Finance in China, they issue a supplementary regulation talking about, okay, with the adoption of the revised standard on revenue and financial instruments, so the reporting entities need to follow the revised template issued by the government. So for these regulations, so because why they use supplementary regulations instead of amendment to the current standard is because the issuance of the supplementary regulations will be more effective than amending the current standards. So that's why sometimes they will use this type of supplementary regulations instead of amended financial statements. Then we will move on to talk about the current China audit framework. So there are 3 sets of accounting standards under the current China accounting framework. But for the audit framework, there's only 1 set of audit standards. The current auditing standards is China Standard on Auditing. The current the China Standard on Auditing is issued in 2006 and is applicable from 1st of January 2007 for all audit assignments on general purpose financial statements. The China Standard on Auditing, just like the new standards, will keep update following the International Standard on Auditing. So in the mainland China, though the China Companies Law state that the companies incorporated under the China Company Laws are required to be audited, but in practice, only those foreign invested enterprise, FIE, state-owned enterprise, listed companies, and companies in certain trade and industries, such as banks, insurance companies, they are required to perform annual statutory audit. So let's move on to talk about the structure on China auditing standards. The structures on China Standard on Auditing, CSA, is basically same as ISA, the International Standard on Auditing. Okay, the first one is on Standard on Quality Control for Firms, which is equivalent to ISQC1, Quality Control for Firms that perform audits and reviews of historical financial information, and other assurance and related service engagements. And then the second part is talking about the assurance standards, which covers every aspect for audit, review, and other assurance work. And then the third part is talking about the standards on related services, related services, which is known as SRS. For example, say agreed upon procedures, which is under standards on related services. But in comparing China Standards on Auditing and the International Standards on Auditing, so there are two standards under the China audit framework. They are not found in the International Standard Auditing. That means these two standards, they are domestic standards that are without equivalent ISA. The first one is on capital verification, and the second one is on communication between predecessor auditor and the succeeding auditors. These two standards reflect the specific social and economic environment of China. So for capital verification, because under the loss and practice, for example, talking about 10 or even 20 years ago. So at that time, when there is any injection of capital, whatever in form of cash or other assets, the injection needs to be verified by practicing CPA, and hence there is a auditing standard governing the operation of the capital verification. Of course, under current laws and practices, it is already not a compulsory requirement now. However, this is not a though it is not a compulsory requirement, but this standard remains effective as a reference tool and hence not cancelled. While for the second one, talking about the communication between predecessor auditor and the succeeding auditors. So it is found in the China standards because the Chinese standard setters are of the view that certain formalities are highly necessary in order to clear-cut the responsibilities between the predecessor auditors, succeeding auditors, as well as the reporting entities. So that's why they have a specific standard talking on this issue. But this issue is not found in the ISA. And these two standards and these two China standards are not conflict with the international standards. Then we'll move on to talk about the convergence of China standards and the international standards. When we talk about the convergence of accounting standards, so when the timeline when we move back to about 12 years ago, at that time, during the final stage of development under the new standards, there is a thorough discussion on and research has been carried out by the China Ministry of Finance and the International Accounting Standards Board, IASB. And eventually, both parties reached a consensus on convergence, and a joint declaration between IASB and the China Accounting Standards Committee was signed on 8th of November 2005. The joint declaration declares that the new standards and the IFRS achieve convergence. Okay, so what is the meaning of convergence? It means that the financial statements prepared under the new standards framework shall approximately carry out with the same results as if prepared under IFRS. If for auditing standards, okay, the same research has also been carried out and a joint declaration between International Auditing and Assurance Standards Board, known as IAASB, and the China Auditing Standards Committee. There's a joint declaration signed between both parties on 8th of December 2005. Okay, the meaning of convergence here is that an audit carries out under the China auditing standards shall have the same opinion as if audited under international standards on auditing. That means if there's an engagement under international standards of auditing and the opinion is a qualified opinion, then suppose if the same engagement is carried out under the China auditing standards, then the opinion covered should also be a qualified opinion instead of a keen opinion or adverse or a disclaimer. This should not be the case. So, does it mean that convergence, this word means equivalent or the same between the both sets of standards? The answer is no, because there still exists both national differences as well as operational or optional differences between both sets of standards. The objective of convergence is try to solve the national differences in the long term. For operational and optional differences, this will not be solved, but leave to users to comply with. And please note that the convergence process is an ongoing exercise, which means this is not once and for all. It doesn't mean that, okay, the joint declaration is signed by 2005, and then there's no more convergence process afterwards. No, it's not the case. When there are new or revised international financial reporting standards or auditing standards are issued, then the China standard setters, they will perform a research and they will judge if it can be fully introduced in the mainland China, and if whether to follow the same timeline. For example, say whether they will follow the same effective date of the respective international standards. So maybe I'll give you some examples to explain the meaning of this one. For example, when IASB issued final version of IFRS 9 financial instruments by 2014, then the China standard setters, they started to perform research over IFRS 9 and the related China new standards, talking about standards number 22, number 23, number 24, and number 37. These four China new standards, they are revised in year 2017 and is effective from January 2018 onwards. So that means in adopting IFRS 9 into the China framework, the effective date is the same between the China new standards and the IFRS 9. And as far as we understand, the scope and the requirement between both standards are the same. Let's move on to another example. Another example is talking about the introduction of IFRS 15, revenue from contracts with customer. So I think every one of you may be quite familiar with, and is also quite concerned over this one. So the IASB has issued IFRS 15 in year 2014, and the Chinese standard and the Chinese standard setters, okay, they start to perform research over this one, and the related China new standard number 14 is revised in 2017. Okay, I believe all of you may know that. So for IFRS 15, the effective date is 1st of January 2018. There's only one effective date. But under China new standards, this is not the case. In the revised standard number 14, so it states that for reporting entities that are listed in both mainland China and overseas, the effective date in using the new standard number 14 is 1st of January 2018, which is the same as IFRS 15. However, for reporting entities that are listed in mainland China only, so-called the A shares in China, the effective date is 2 years later, talking about 1st of January 2020. While for the remaining entities, that's those long-listed entities, the effective date is 1 year further delay, talking about 1st of January 2021. Okay, you may ask, why there is a different effective dates for the different entities. Okay, the China government explained that the reason of the different effective date is to take care the different situations of the reporting entities. For those reporting entities that are listed overseas at the same time, the application time shall be the same in order to prevent the conflict with IFRS 15. While for the remaining entities, because the requirement under IFRS 15 is somehow complicated, so the China government want to reserve sufficient time for those entities so that they can better prepare for the implementation of this revised standard. Other than the effective date, okay, so for the implementation of IFRS 15, so I believe all of you may be aware that IFRS 15 has laid down two transition methods in applying this standard. The first one is to apply IFRS 15 retrospectively to each parallel reporting period present in accordance with IAS Act. And the other method is to apply retrospectively with the cumulative effect of initially applying IFRS 15 recognized at the date of the initial application. So there are two options under IFRS 15. But however, in the corresponding China Standard number 14, it only allows the second method to be used. The reason why one method allowed to be used is that they want to prevent excessive burden to the reporting entities in adjusting the figures for all parallel reporting periods. So that means under the revised new standard number 14, there's only one method for the transition. And there are two methods under the IFRS 15, but these are classified as optional differences. Okay, so far up to now, I believe all of you may also know that IFRS 16 leases and IFRS 17 insurance contracts are also issued, but the corresponding China new status hasn't been revised up to now. For IFRS 16 leases, the China standard status has already issued a draft of the revised status by early this year. However, up to now, there is no announcement on the effective date of the revised standard. So we are still keeping view over this one. So that means even there are IFRS issued, the China new standard, the China standard status, they need time to investigate the social effect, and more important, and maybe more importantly, they also need to check if it affects the current tax framework in China, because as I would say for leases, there are value-added tax imposed on the lease payment. So if the accounting treatment is changed, whether you affect the income tax as well as the value-added tax under the China framework is also a concern. So maybe due to these reasons, the revised standard is not yet issued up to now. So for the accounting standards, there are these certain differences. But in general, there is no differences in the audit standards except for those two standards found in the China one, but not in the international one. So for the convergence, we are told that there are national differences between the China standards and the international standards. So at times of issuance of the China new standards, there are two national differences. At the time of issuance, that means by 2006. Okay, these two, the first one is the recognition of related parties, which it is solved in year 2009. And the second one is on the treatment of impairment losses. Okay, so talking about these two national differences, maybe we focus on the first one first, because this is solved in talking about 9 years ago. So when we talking back about the history, so under the international standards at that time, the state-owned enterprise, they should be classified as real parties. But under the China new standard, they will say that, okay, if the state-owned enterprise, because if say if all entities they are just owned by the government, they should not simply classify as real parties if there's no other indicators. Because in the China economic environment, so there are a lot of state-owned enterprise in China. So in the mindset, if all state-owned enterprise they are classified as real parties just due to government ownership, the effect will be very, very wide. So after discussion between the China standard setters as well as the ISB, the IASB agreed to the approach by the China government, and they agree that entities cannot simply be classified as real parties just because they are subject to control by government. So the IASB has revised IAS 24 in year 2009. So this national differences is solved. The definition of real parties between the China new standards and the international standards are supposed almost the same. Of course, there are also still some operational differences in the definition. And then we move on to talk about the treatment of impairment losses. In considering the treatment of impairment losses under IFRS, if and only if there has been a change in the estimates used to determine the asset equivalent amount since the last impairment loss was recognized, and impairment loss recognized in prior periods for an asset other than goodwill can be reversed. However, under the China new standards, for tangible assets, they are measured at cost, such as investment properties under cost model, fixed assets, intangible assets, etc. Once the impairment loss is recognized, it cannot be reversed in the subsequent periods. If you have any changes in accounting estimate or with other information on loss, the standards may say it cannot be reversed in the subsequent periods. Okay, then you may ask, then why? Why it is so? In the perspective of the Chinese standard setters, they believe that, okay, under the development of economic and technologies, which is going faster and faster, especially for technologies. So the value of the tangible assets, for example, say fixed assets, the value usually should move downwards instead of in opposite directions. So that means if there is an impairment loss to be recognized, then suppose this loss shall treat as permanently, because in reality, the possibility of reversal should be remote. So this treatment is quite similar under the US GAAP. Moreover, in the mindset of the China standard setters, they believe that, okay, the prohibition of the reversal of the impairment loss can avoid accounting treatments in window dressing mode, or frankly say, is moving. Suppose, or say it's because the reversal, the impairment loss cannot be reversed. So, circumstances say, okay, we make impairment loss this year, and then reverse in the future years. In order for the smoothing of profit, it will not be occurred under the China framework. After talking about the operational or the optional differences, then we'll move on to talk about, after talking about the national differences, then we'll talk about operational and optional differences between both sets of standards. There are quite a lot of operational or optional differences between both sets of standards, but for this webinar, we'll focus on 3 of them. The first one is on use of fair value. Second one is on reporting currency. And the third one is talking about the financial statements disclosure. For the third one, financial statement disclosure, will be discussed further in the later session. So in this slide, we'll focus on the fair value and the reporting currency first. When we talk about the fair value, okay, both China new standards and the IFRS require that financial instruments shall measure at fair value or amortized cost under different circumstances. However, under China new standards, fixed assets and intangible assets should measure under cost model. While under IFRS, fixed assets and intangible assets can be measured under either cost model or reversion model if fair value can be measured reliably or measured by reference to an active market. Okay, so then you will also ask, then why there's such a differences? It is because at the China standard setters perspective, okay, it is appropriate to introduce fair value concept for financial instruments since the financial market in China is already become mature now. So that means the fair value can be obtained under objective evidence. However, they observe that active market is still under development for those long financial assets. Moreover, the fair value information for tangible assets, especially for those second-hand or even third-hand or used tangible assets, cannot be reliably measured or obtained. Hence, they believe that introducing fair value to a full extent may cause accounting information, especially those for the tangible assets, becoming unreliable. Of course, you may argue, historical cost is also not a perfect one, since it reflects a value in the past only. But at least historical cost itself can be properly supported. For example, say by reference to the receipt, by reference to a contract. This can be objectively measured, but not a subjective one. So therefore, under the China new standards, the fair value is introduced to a certain extent only, such as financial instruments, investment policies, biological assets. Okay, just limit to these categories. Even for the investment policies and the biological assets, the relevant accounting standard has clearly mentioned that if you want to use the fair value to measure these two items, this can be used only when there's an active market and fair value can be reliably obtained. That means if active market is not available, the reported entity should also adopt cost model instead of reversion model for investment policies and the biological assets. Okay, then we move on to talk about the reporting currency. So for reporting currency, under the China new standards, an entity in the mainland China, normally they shall use Chinese yuan, known as RMB, as its functional currency. However, if an entity receives an expense mainly in another currency other than Chinese yuan, then that foreign currency can be used as a functional currency. For example, an entity transacts mainly in United States dollar, Japanese yen, euro, or Hong Kong dollar. If it is so, then that entity can use United States dollar, euro, Japanese yen, Hong Kong dollar, etc. as its functional currency. But even so, okay, the financial statements prepared also need to convert to Chinese yuan, RMB. That is, for a set of financial statements under the China new standards, whatever the functional currency to be, it should be presented in Chinese yuan. At this point, I need to emphasize that the functional currency definition and the requirements, they are the same between the China new standards and the international standards. However, under IAS 21, it states that an entity may present its financial statement in any other currency. So it makes the differences between them. The reason of such difference is because under the China accounting laws, the financial statements shall present in Chinese yuan. That means under the China accounting laws, you are not allowed to present the financial statements not in Chinese yuan. So the China new standards is required to comply with the requirements of the domestic laws, and that's why it states that the financial statements prepared under new standards shall be prepared in Chinese yuan. But particularly, I can say, of course, the financial statements shall be presented in under Chinese yuan, but in certain cases, you can also prepare the financial statements. You can prepare the financial statements in so-called dual currencies. That means the financial statements show two currencies at the same time. which from our past experience, it is allowed, but it is quite rare. Then let's move on to talk about the financial statements, the components. Under the China new standards, a complete set of financial statements comprises 5 components: balance sheet, income statement, cash flow statement, statement of changes in equity, and notes to financial statements. A reporting entity shall present with equal prominence for the above components in the financial statements. Okay. Then you will aware that in this case, then the requirements between the China new standards and the IAS 1 presentation of financial statements, they are just the same. Yes, they are the same. Which reporting entity need to show these 5 components in a complete set of financial statements. Then let's move on to talk about each component separately. Before talking about the balance sheet, then let's also talk about the basis and the principles of preparing the financial statements. I can say the requirements under the China new standards is also same as those under IAS 1. For example, say the principle of going concern, core basis of accounting, materiality and aggregation, principle of offsetting, comparative information, frequency of reporting, and the consistency of presentation. These 7 requirements under the China new standards are the same as those under IAS 1. For example, for the principle of offsetting, so under the IAS 1, you cannot offset an amount due from a party and an amount due to a party. You cannot offset these 2 amounts together and show a net amount unless there is a legal enforceable right to do so. This principle of offsetting is also the same under the China new standard. Okay, then we move on to talk separate components of the complete set of financial statements. The first one we'll talk about balance sheet. Okay, as mentioned in the previous slide, okay, the accounting standards in China, they have laid out the standard format for the financial statements. That means there's a standard format for the balance sheet, income statement, cash flow statement, and a statement of changes in equity. Sorry. And for the balance sheet, usually we will concern on the current and the long-current distinction for assets and liabilities. For this one, I can also tell that the long-current distinction for assets and liabilities under the China standards, they are also the same under the international standards. However, there's a differences between the China new standard and the international standard. In the China standard, you need to show aggregate total of assets and aggregate total for liabilities and equity. However, under IAS 1, there is no such requirement. So suppose you can show current assets less current liabilities and then total assets less current liabilities in the balance sheet, but this cannot be found in the balance sheet under the China new standards. Okay, in the next slide, I will show a balance sheet of a typical trading company under the China new standard for the ease of reference. Okay, I believe you can see it is the first part of the balance sheet of a trading company under the China new standards framework. Okay, so you need to show current assets as the first part, and then the long current assets at the second part. And then you can see in the bottom part, you need to show total assets. This one, the total asset. And then I'll show the second one, which is on the second part of the balance sheet. Okay, so in the second part of balance sheet, so you need to show current liabilities and then long-term liabilities, and then equities. And then in the bottom part, you see there's a disclosure of total liabilities and owner's equity. Okay, so that means, can you show current assets and current liabilities under this standard format? You can't. You can't find a place to insert this amount in the standard format of the balance sheet under the China new standards. And then we move on to talk about the income statement. Okay, so for the income statement under the China new standards, okay, the expenses, the disclosure, they require that the expenses shall disclose per functions. For example, say you need to show cost of goods sold, taxes and levies, administrative expenses, selling expenses, etc., under the standard format. However, under IAS 1, it states that the expenses, okay, you can present the analysis of expenses using a classification based on either their nature or their function within the entity, whichever provides information that is reliable and more relevant. That means you can show the expenses by nature or by function. If you think which one is more appropriate, you can use that one. But under the China new standard, you are only allowed to use by function instead of by nature. And for the income statement, though the name is income statement, however, the disclosure of other comprehensive income and total comprehensive income, these requirements are the same between both sets of standards. The next slide, I will show you a standard format of income statement of a trading company in China. So you can see the first part is the turnover, and then you less expenses which are classified per function. You can see cost of turnover, taxes and levies, general and administrative expenses, selling and distribution expenses, financial expenses. After deducting all these expenses, then it comes to operating profit. Under China standards, so income and expenses which are non-operating in nature, for example, say one-off subsidy from the government, or loss on disposal of certain tangible assets and intangible assets, they are non-operating in nature and need to show separately under non-operating income or non-operating expenses. Okay, after take care or incorporating the non-operating income and expenses into account, then it comes to profit before taxation, then income tax, and then net profit. And then you can see in the fifth and the sixth row, it is other comprehensive income and the total comprehensive income. So in the latter part, the requirement between the China new standards and the international standards, they are just the same. Okay, then we move on to talk about the third component of the complete set of financial statements, which is cash flow statement. Okay, under the China standards, you need to prepare the cash flow statement under direct method. And then in the notes to the financial statements, you need to show a indirect method reconciliation between results before taxation and then to net cash flow from operating activities. So that means you need to prepare the cash flow statement under both direct method and indirect method under the China new standards. So how about the requirement under the IAS 7? I believe all you will be quite familiar with. Under IAS 7, you can present the cash flow statement under either direct method or indirect method. You can just choose either one, and there's no further disclosure requirement in general in the notes to the financial statements. So the method impairing is the optional differences between both sets of standards. Okay, then this slide shows a standard format of the cash flow statement under the China new standards. So the terms or the items in this slide is the standard wording extract from the China standards. So it divides the cash flow into different natures, and then require the reporting entity to analyze its cash flow nature and then fill the figures according to their nature. Of course, the end result shall also be the same whether under the China new standard or under the international standards. Okay, the fourth component is statement of general equity. Okay, for this one will be simpler because the disclosure requirement between the China standards and the IAS 1, they are just the same. So let me show you the template of the statement of changes in equity under the China new standard. Okay, you can see the disclosure requirement is almost the same between both standards. So in under the China laws, so in upper part you can see you can find paying capital, capital reserve, surplus reserve, retained profit. Okay, I believe all of you will be quite familiar with paying capital and the retained profit because these are usual terms for whatever entities. However, you may find capital reserve and surplus reserve, and the surplus reserve. So what are the nature of them? So under the China company laws, okay. So if an reporting entity earns profit for a year, so after the income tax, after the other comprehensive income, and then it comes to a profit for a period, and then before distributing the profit to the shareholders, so the reporting entity need to withhold, say 10% of the profit for the current year to a reserve known as surplus reserve, which is capital in nature and cannot be distributed to the shareholders. So when the accumulated total of the surplus reserve reaches 50% of the paying capital, then you can no longer to put further profit to this surplus reserve. So you can see surplus reserve is also known as a cushion, okay, or a comfort zone, or as an extra capital basis for an entity, because this reserve cannot be distributed to the shareholders as in form of dividend. However, the surplus reserve you can transfer it to increase the paying capital of the entity. So we will talk about the capital reserve. Okay, capital reserve somehow is if an shareholder, for example, so if he or she or a holding company, okay, they contribute extra or in excessive of the required capital, then the excessive part will put to capital reserve. So for example, if a shareholder they are required to inject maybe 2 million to a reporting entity, but because this shareholder is in overseas, so he or she try to remit equivalent, say, US dollar to the reporting entity. However, you know the exchange rate always fluctuates. Okay, so the amount arrived in the reporting entity's bank account, when I say talk about 2 million and 1,000. Okay, the $2 million, of course, is treated as the capital injected by the shareholder. However, for the excessive $1,000, okay, it will not be put under the paying capital. Rather, they will put under capital reserve, which is also capital in nature and cannot be distributed to the shareholders. Okay, these are the basic concepts of the capital reserve and surplus reserve under the China company laws framework. Okay, then we'll move on to talk about the fifth component, which is notes to the financial statements. I can tell the requirements are the same between the China new standards and the IAS 1 for the notes to the financial statements. Okay, for example, say you need to disclose the basic information of the reporting entity. You need to disclose the basis of preparation of the financial statements. You also need to prepare a statement of compliance, whether you comply fully on the new standards or IFRS. You also need to disclose significant accounting process and accounting estimate. You also need to explain. You also need to disclose an explanations to the significant accounting terms. You also need to include the disclosures, which is required under other accounting standards, and then the capital management disclosure. Okay, these 7 disclosures are the same between both sets of standards. Okay, that's all for talking about the financial statements under the China accounting period. So, and then we move on to the question and answer session. So, if you have any questions, please feel free to raise. So, okay, there's one question from an attendee that he wants to know more about the ASSC 2011. Okay, so maybe if possible, I want to ask the question, who is the question. So, if possible, would you please put your question more specific, because ASSC 2011 is also a comprehensive standard. Also a comprehensive standard on all accounting components. So if I can know which part you want to know more, then I can explain to you in a more specific way. Okay, so then I want to see if there's any further questions from all of you. Applicability of standard in China, and then okay, there are some questions. Okay, there are a question that an attendee asked. So there are taxes under the cost of turnover. How is that different from income taxes? Okay, maybe I will move back to that slide. Okay, I believe the attendee may have a question on the income statement. So because under cost of turnover, there are taxes and levies. Okay, so these taxes and levies and the income tax, which is under profit before taxation. Okay, for the income tax, it is talking about the tax on the profit of a reporting entity. So the requirement is the same under IAS 12 income taxes. And then for the taxes and levies under the cost of turnover, it means other taxes and levies which is non-income tax in nature. For example, say in China, there are consumption taxes and certain government levies, which is known as educational levies, or the land acquisition taxes. These taxes and levies, they are not income tax in nature under the China framework. And so for those taxes and levies, they need to group and present here in the income statement. So I hope that this can answer your question. Okay, and then there's a question from an attendee talking about the applicability of standards in China. Okay, the same attendee also asked about the ASSC 2011. Okay, so maybe I believe this attendee want to ask question about the applicability of ASSC 2011 of over the applicability over the China entities. Okay, so if talking about more specific on the applicability of ASSC 2011 on the China entities. Okay, in that standard, okay, you may show that okay, so you need to fulfill the operation and the size test. If you fulfill those tests, and if you are not a financial institution, not a insurance companies, not a group companies, then you can adopt ASSC 2011. Okay, the size test and the operation test, they are different under different industries. For example, for an entity under industry, or say the manufacturing industry, or the entity under the trading industry, the operation test and the size test, they are different under different trades. So it depends on which trade or industry you are in, and then you check back to the criteria and the test, and then you can see whether you are eligible to apply ASSC 2011. Hope I can answer your question fully. So if you have further questions, please feel free to raise. And then there's a question. It says that in China, is there any threshold for an entity to need to be audited? Whether all companies need to be audited? Okay, so maybe I move back to my previous slide. Okay, so if we just talk about the China company laws, okay, is there a general requirement that all companies incorporated under the China company laws need to be audited? Okay, this is talking about in general. But in practice, okay, only those foreign invested enterprise, state-owned enterprise, listed companies, and the companies in certain trades such as banks, insurance companies, they are required to be audited. Or in a more practical way, if the tax bureau doesn't require an entity to be audited, then that required entity usually will not carry out an audit. We want to carry out an audit towards them. This is the practical issue in China. So, I would say yes. Under the framework and under the laws, there is no threshold whether which company to be audited or whether that another company is not to be audited. That means not like Australia. Australia, as I understand, in Australia laws, then certain entities is required to be audited and certain companies is not required to be audited. But in China laws, there is no such threshold. But in practice, certain entities which suppose under the China company laws, they are required to be audited, but practically, they are not audited. Hope my answer this answer can satisfy your questions. Okay, then it comes to a question. Okay, so differences between functions and the nature-based classification in income statement. Then I believe it talks about under IAS 1. So because in the IAS 1, so it allows you to classify the expenses under two ways, whether by functions or by nature. So for the functions by nature, it depends on the main activity of the company. Because now usually we classify expenses, say under cost of turnover, selling expenses, and administrative expenses, because it's a general classification. However, so for certain entities, this classification may not be so proper for them to be sent to analyze the expense, the nature of the expenses in the company. So under IAS 1, so as far as I understand, it allows the company to be sent the expenses in form of nature. For example, say rental expenses or other form of expenses, which can better analyze the nature of expenses of the entity. So for details, I believe you may refer to IAS 1 for further details. And then it comes to a further question. It talks about the qualification required to become audited in China. Okay, so in order to become a qualified auditor in the mainland China, so there are certain requirements. Okay, the first one is you need to pass the professional examinations in China, which is known as the uniform examinations of certified public accountants in China. This examination divides into two stages. The first one is known as professional stage, which the examination in this stage examines your professional knowledge. And the second part is after you pass the examination under the professional stage, and then it comes to so-called comprehensive stage. So I believe just like the qualification examination in certain places, just like Hong Kong. So in this second stage, so you need to take an examination which the syllabus covers all professional parts, all professional parts, and you need to answer as if you are CPA, and then you meet a certain scenarios, and then how do you react to those scenarios, which is known as comprehensive stage. So this is the examination requirement. And then after you have completed the examinations, then you need to have at least 2 years audit experience in China. So if you have both 2 years audit experience in China, as well as you have passed the examinations, then suppose you can apply to become a practicing certified accountant in China. Okay, then this question quite interesting. So it asks about whether Chartered Accountant of India can become the auditor in China with CPA qualification. Wow, this is rather interesting. I believe for this one, I need to check further for you because what I could say is, okay, in general, if you are a Chartered Accountant of India, and if you have passed the professional examinations in China, as well as you have got 2 years audit experience in China, then suppose you can apply for as a practicing CPA in China. In general, this is in a general principle. But as far as I understand, it seems that there's no Indian CPA so far in China up to now. So maybe if you want to further clarify this issue, maybe I can clarify this one for you and then reply afterwards. So if possible, would you please leave your email address to Stephen so that I can reply you later on. Okay, it seems that there are all the questions I have received. So I'd like to ask if there's any further questions from the attendees. Okay, so if there's no further questions, okay, and then thank you for your questions raised. And if you have any further inquiries over the webinar, okay, please feel free to contact us by referring to our contacts as per this slide. Okay, thank you once again. And I would like to pass the time back to Stephen.
Thank you, William. Thank you for your fantastic presentation. If the audience has any other questions, as you see on the screen, there's information for William right there. Please feel free to contact William directly. This webinar do provide a 1 CPE credit, so please contact me directly to obtain the credit certification. This webinar is also recorded and it will be available shortly at our Prime Global website. Please go to www.primeglobal.net under events for review of this recorded webinar or to locate future webinars. Thank you all for your participation. I hope to see you all again very soon in our next webinar section, which will be announced very shortly at our Prime Global website. So have a great day and we hope to see you again soon. Bye-bye.
Okay.